While gold prices continue to be in a slump, you may want to be looking at platinum and palladium. Here to talk to us about it today. In a recent report, this shows that demand's continuing to rise for those two precious metals, and yet supply is not rising with it, is Will Rhind of ETF Securities U.S. Will, thanks for being back with us.
Good to be here.
Platinum, palladium, kind of your wheelhouse right here. Can you tell people a little bit about what you're expecting in 2013 for the precious metal?
Well, platinum and palladium as metals have pretty solid fundamentals, which means that right now there's more demand for the metals than there is supply, and both markets are in a deficit situation. Palladium worse than platinum. Now, the main source of demand for both of those metals is the auto industry, actually catalytic converters, which clean the emissions on cars.
Yeah. And
these metals come majority from South Africa and from Russia. So as the global auto industry recovers from the 2008 lows, we are seeing continued demand for both metals.
So what's happening in South Africa and Russia that is cutting off this larger supply?
The major issue is principally in South Africa, which accounts for 80% of the world's supply of platinum and about 40% of the world's supply of palladium. And very simply, there are some very severe issues with the mines and the labor situation, whereby a number of different mines have had to curtail production due to various sort of political strikes from the unions. And production has suffered as a result of that, but of course the depressed platinum price kind of in the grand scheme of things has meant that production for a lot of the big mining companies is sort of break even or not very profitable at the moment.
Yeah, and so back towards the end of 2012, we saw a number of strikes. Some miners did end up making concessions. Are we still seeing a lot of these miners, the laborers working in the mines, are they still upset with these companies?
Yes, I mean, this is a situation that doesn't really have any easy solution to it.
Sure.
The mining companies in the strike situations that have occurred have given concessions which have principally involved higher wages. So there's been significant wage inflation, which obviously over time is pretty unsustainable, given that the metal prices aren't rising at a similar rate. So we have a situation whereby the wage inflation pressure is increasing at also a time when general costs have been increasing through higher energy, electricity and other input costs. And on top of that, the metal itself is just not selling at a price that's giving a high level of profitability to these companies.
So ultimately, do we think this decrease in supply, jump in demand might push those prices much higher?
I think that's certainly the view that ourselves, ETF Securities, and a number of our key investors have taken. And through the ETF, PPLT for platinum and PALL for palladium, that gives investors a way to express a pure view purely on the metal. You don't have to worry about any of these company risks or political risks, etc., that come with the broader company landscape, and you can just focus on the metal itself.
Well, Will, as always, appreciate your insight on this.
Thank you.
You heard it from Will. He always gives a good primer, especially on platinum and palladium. Gold not today, but if you're looking to jump into some sort of precious metals, a lot of analysts are saying you might want to take a look at platinum and palladium. I'm Deaux, The Street.